It's one of those bits of advice you hear everywhere, right? Especially if you're trying to learn something complicated, like, say, trading. Review your past actions, learn from your mistakes. It sounds completely logical, doesn't it? But what if that piece of conventional wisdom, that almost sacred ritual, was actually maybe holding you back profoundly?
Yeah.
Today, we're getting into a really contrarian perspective. It's from a trader who basically argues that traditional journaling, the kind we're all told to do, isn't just unhelpful, but maybe fundamentally flawed. We're going to explore why they stopped journaling their trades altogether, and maybe more importantly, what they do instead. It's quite a different approach to getting better.
Yeah, and our insights today are coming straight from this really thought-provoking paper. It's called Why I No Longer Journal My Trades. It's by someone named Sir Margin from Kumo Solutions PLD. And it's not just a method. It's like a whole philosophical shift, a strategic rethink for dealing with, dynamic systems.
Right. So our mission today is to really unpack this viewpoint. It feels pretty radical. We want to understand the core ideas behind their alternative strategy and figure out how it shifts the focus, away from constantly looking backward, which can be frustrating, let's be honest, towards looking inward and critically looking forward. So yeah, buckle up because this might challenge some pretty common beliefs. Okay, let's get into it. What exactly is this sacred rule of trade journaling? The one that traders are like hammered with from day one.
Oh, it's absolutely presented as non-negotiable, isn't it?
Yeah.
Like step one, you decide you're serious about trading. Okay, get a journal. And you're told to record everything, meticulously. Your entries, your exits, profit, loss, the market conditions at the time. And this is always a big one. Your emotional state, your psychology. Why did I do that? What was I feeling? The whole promise, the absolute pitch, is that if you dissect the past, if you figure out why you messed up, you'll spot patterns, and then you won't repeat those mistakes. It's sold as the path, the only path, really, to learning and getting consistent. And it makes sense on the surface, right? That's why it's everywhere.
And Sir Margin, the author we're talking about, they really went all in on this, did it diligently. For a whole year, filling spreadsheets, diaries, marking up charts. I can just picture the hours spent staring at past trades. But then they hit what they call a profound philosophical dissonance. Now that's where it gets really interesting for me, this philosophical leap. What was the core problem? Why did looking backwards start to feel so flawed?
Well, what's really key here is that they realize the entire practice of journaling, like the whole foundation, it rests on this one big assumption, that the past is a reliable map for the future. And they just couldn't accept that anymore. They started seeing trading less as a science of repetition, find pattern, memorize pattern, apply pattern, and more, as maybe an art of anticipation. Think about it like solving a puzzle. Sure, solving yesterday's puzzle might teach you some general skills, but it won't give you the answer to today's puzzle, right? Because it's different. And the market, in Sir Margin's view, it's always different. It's in this constant, unforgiving state of change. So looking back too closely at one specific past event, it becomes less relevant. Sometimes maybe even misleading.
Okay, so it's less like studying, say, a historical battle plan to win the next war, and more like playing chess against a grandmaster who literally changes their entire strategy, their opening moves, maybe even the rules, every single time you play. Analyzing your last loss against that kind of opponent.
Yeah, it becomes kind of pointless, doesn't it? Because the opponent is new, the board state is new. Even you are probably thinking differently. You might just end up reinforcing bad habits like confirmation bias gone wild.
Exactly, you hit the nail on the head. If you only look for what did happen, you risk missing what could happen next, simply because the underlying conditions aren't the same anymore.
So, okay, if the past isn't a reliable map, what is the market then? Sir Margin introduces this first principle, and it's really evocative. The market is a river, not a road.
Yeah.
That immediately made me think of
Heraclitus.
You got it. It's absolutely rooted in that ancient Greek idea. No man ever steps in the same river twice, for it's not the same river and he's not the same man. And that perfectly captures Sir Margin's view of the market. See, traditional journaling treats the market like a road, right? Predictable path, maybe some recurring potholes you learn to avoid. But Sir Margin says, no, that's an illusion, a potentially dangerous one. The market is a river, always flowing, always changing.
Okay, but hang on. Even if the river changes, aren't there still some underlying currents? Predictable eddies, things like seasonality maybe, or how certain assets react to big economic news? Are we like throwing the baby out with the bathwater if we just ignore all past data?
That's a really good point, and it gets to the nuance. Sir Margin isn't saying ignore all data. That would be silly. What they're questioning is the method. Specifically, learning from individual past trades as if those exact conditions, that precise moment, will just neatly repeat itself. The river analogy is about the market's overall state. It's holistic. Think about everything pouring into it constantly. New information, new traders, high-frequency algorithms that learn and adapt faster than we can blink, global news, politics, sentiment shifts, liquidity changes. It all churns together. So the news event that caused a rally last month, it might trigger a completely different reaction today because the river's underlying flow, its depth, its speed, it's all changed.
Right, okay. So this constant change, this river idea, what does it actually mean for the practice of reviewing past trades? If I spent an hour yesterday picking apart a losing trade from last week, was that just wasted time?
According to this philosophy.
Probably.
Yeah, because reviewing a trade in that kind of microscopic detail, it operates on the flawed assumption that the exact unique mix of factors that created that moment can be perfectly recreated and that you'll recognize it perfectly next time. Sir Margin just wasn't willing to make that leap anymore. The river's moved on. That specific wave you were analyzing, it's gone. Trying to understand that wave is pointless when the next set of waves and the currents driving them will be totally different. The focus has to shift, from memorizing old waves to learning how to actually surf any wave the river throws at you.
So for us, the aspiring swimmers in these market waters, what does that mean? Are we just supposed to, float aimlessly, be tossed around?
Not at all. It's not about being passive. The goal isn't understanding the wave that just knocked you over, or even trying to perfectly predict the next one. The goal is to become a fundamentally better swimmer. Someone who can handle any water conditions, strong currents, choppy waves, hidden rocks, whatever. It's a huge shift in focus, really, away from analyzing external history and towards developing your own internal adaptable skills. You can't control the river, right?
Right.
But you can control how well you swim in it.
That is a powerful reframe. Wow. Okay. And Sir Margin takes it further with the next principle. This one personifies the market in a really striking way. It's a duel, not a dialogue.
Exactly. And this isn't just like a catchy phrase. Sir Margin explicitly says they don't see the market as just random noise. Instead, they personify it. They think of it as one single, intelligent, and incredibly powerful opponent, a Goliath, basically. And this mental model, it's not just flavor. It dictates everything they do. It changes trading from just clicking buttons based on charts into this high-stakes intellectual duel. Every single trade is a direct confrontation with this massive opponent.
And that perspective, it completely changes how you view a loss, right? For a lot of people, a loss feels personal, like failure. But in this dual view, it's not bad luck. It's just being outmaneuvered. How does that take the sting out?
Precisely. When the market is your opponent, a loss stops being about bad luck, the market being rigged or you being stupid. It becomes a simple, almost cold, objective assessment. In that moment, you were outplayed. Goliath was better. Maybe they saw something you missed. Maybe they processed info faster. Maybe they just had a better strategy for that specific situation. And that's incredibly freeing, actually. It strips away the blame, the excuses, the raw emotion that often comes with losing money. A loss becomes just data, neutral feedback. My strategy or my execution wasn't good enough right then. And that immediately shifts where you focus to improve. It's not about finding a magic pattern in the past data anymore. It's about becoming a smarter, faster, more adaptable strategist yourself.
Okay, so in that context, going back and journaling the details of the loss, yeah, it does start to sound kind of absurd, as Sir Margin puts it, like a swordsman who just lost a duel, sitting down and obsessively drawing diagrams of the one specific thrust that got past their guard. It feels like me trying to learn Spanish by just reviewing flashcards of words I got wrong yesterday. But the next conversation is always different, faster, uses new slang. I need to learn to think in Spanish, not just memorize vocabulary lists.
That's a perfect analogy. Sir Margin uses that swordsman comparison too. Reviewing past trades is like that defeated fencer analyzing the exact move that beat them. What good does it really do? The next opponent might have a totally different style, a different weapon, a different rhythm. Maybe they're left-handed. So, to prepare for the next duel, you don't practice blocking that one specific move from the last fight. That's wasted effort. Instead, you improve your overall fencing skills, right? Your speed, your footwork, your perception, your stamina, your mental game. The focus shifts completely. Internal skill development, not external pattern matching. Become a better fighter, not a bitter fight historian.
Right. Okay, so this is a big shift. If we're ditching the post-trade analysis, not spending hours digging through yesterday's failures, where does the effort go? Because this isn't about being lazy, I assume. It's about redirecting that energy, which probably means the work is actually more intense, just different.
Oh, absolutely. It's definitely not less work. It's just focused differently. Doing the right work, you could say. So margin puts basically all their effort into the phase before a trade is even considered, let alone executed. They use this really rigorous pre-mortem process. Now, we all know post-mortems, right? Analyzing what went wrong after something failed. This is the opposite. A pre-mortem is where you actively try to anticipate and plan for everything that could go wrong before you even start. You mentally kill the trade idea to see how it might die. And this whole process is inspired by something called the minimax algorithm from game theory.
Okay, minimax algorithm. Sounds a bit complex. Can you break that down? What does that mean in practical terms for a trader?
Sure. Think of it like this. Minimax means you always plan based on your opponent making their best possible move against you. Then you figure out your own move that minimizes your potential loss or maximizes your gain, assuming they make that best move. It's like a chess champion always assuming their opponent will see the perfect counter and building their strategy to handle that. It forces you to plan for the worst-case scenario and build your entire approach around surviving it, or at least mitigating the damage.
Gotcha. Assume Goliath is brilliant and has a counter for everything. Okay, so let's break down this pre-mortem, this minimax simulation. What are the key steps?
There are basically three core steps, and they all kind of link together. First is the prediction. Before you even think about clicking a button, you mentally simulate the trade. But here's the key. You don't just predict one likely outcome. You map out several different probable paths the market might take. You ask, okay, if I enter here, what are Goliath's three most likely responses? What counter moves could they make immediately? So say you're thinking of buying a stock. You might predict, okay, path 1, it shoots up. Path 2, it drops hard. Path 3, it just kind of chops sideways.
Okay, let's make that super concrete. Say I'm planning to buy stock XYZ at $100. Walk me through just one counterplay scenario if it instantly goes against me. What do I map out?
Great question. Let's do it. So you want to buy at $100, prediction scenario. Goliath immediately pushes it down. It hits $99, then maybe $98 fast. Now, the counterplay for that specific scenario. You plan your reaction in advance. Okay, if it instantly drops, my predefined exit point, my stop loss, is $98.50. If it touches that, I'm out. No hesitation, no second guessing. Protect to capital. Or another counterplay for a different scenario. What if it pops up to $101, looks good, but then stalls and starts to drift back down? Your plan might be, if it hits $101.50, I sell half my position to lock in some profit, and I immediately move my stop loss on the rest to my entry price, $100. Now it's a risk-free trade. You see? You try to think through every plausible branch, every fork in the river, before you put a single cent on the line. It's like preparing for multiple futures simultaneously. And then comes the third critical step, the worst-case scenario. Sir Margin calls this the close compact. You always assume your opponent Goliath is stronger, faster, smarter. Always. So the core strategy isn't really about trying to win this epic battle head on.
It's more about avoiding that close quarters fight if you can. But you must assume it will happen eventually. So you ask the hard question. If Goliath does close the distance, if this trade goes horribly wrong right away and I'm trapped, how do I survive?
And that's where risk management fits in, but maybe viewed differently, not just as a calculation, but as a survival tool.
Exactly. It's reframed. The stop loss isn't just some arbitrary price level on a chart based on, I don't know, a moving average. It's your sling, like David's sling. It's your one pre-planned, decisive tool to get out of that worst-case scenario with minimal damage. It's the escape hatch you built before you entered the burning building. And position sizing, that's not just risk 1% of my capital. It's the size of the stone in that sling. It has to be calculated carefully. Big enough that if your prediction is right, it actually makes a difference. It stuns the giant. But crucially, small enough that if you miss, if you're wrong, you can afford the loss. You can drop the stone and run away without getting crushed. You survive to fight another day.
Wow, so the actual act of clicking the mouse, entering the trade, it really does become almost anticlimactic. It's just putting the plan into motion, a plan that's already been intensely war-gamed, simulated, stress-tested in your head, all the real intellectual work, the analysis, the strategy, the risk assessment, it's already finished before you even commit capital. That really flips the script on where the effort goes. Okay, but this approach, it doesn't mean you just stop trying to get better, right? You still need to improve. It just sounds like you're focusing on improving, well, the right thing. So if we're not journaling past market moves, how do you improve within this framework? What does honing the instrument, which is you, the trader, actually look like in practice?
Yeah, it's a total shift, isn't it? From looking outward to looking inward. Think about traditional journaling questions. Why did this trade fail? What did the market do? Those questions point externally, trying to understand this complex, chaotic system that, as we've discussed, might be fundamentally unknowable in that way. So Margin's approach flips that entirely. The questions become intensely self-reflective, focused purely on your own performance and preparation. After a trade, win or lose, they're asking things like, okay, was my pre-trade mini-max simulation thorough enough? Did I actually anticipate the move that happened, or was there a possibility I completely missed? Or when the close compact happened, when things went wrong fast, did I execute my survival plan perfectly? Did I hesitate? Did I fudge my own rule even for a second? And maybe the most important one, what specific skill was I lacking this time? Was it my speed in reading the order flow, that real-time tape of buys and sells? Was it my patience in waiting for the setup to fully form? Was it the raw discipline to stick to my planned position size, even when I felt greedy or fearful?
So it really becomes about drilling your internal capabilities, not memorizing external patterns. Like, yeah, becoming a better chess player by sharpening your strategic mind, your calculation ability, your focus, not just by memorizing thousands of old games someone else played.
That's exactly it. Improvement in this philosophy comes from identifying your weak spots in perception, discipline, strategy, resilience, and then actively drilling and refining those skills. You're making yourself a better instrument, more adaptable, more effective, no matter what the market throws at you. You can't control the external chaos, but you can control how sharp, how prepared, how disciplined you are.
Okay, so let's bring this home. What does all this mean for you, our listeners? Whether you're actually trading or maybe running a business or honestly just navigating the general craziness of modern life. This deep dive into Sir Margin's thinking, it really offers a powerful way to reframe how we approach any complex, unpredictable challenge, doesn't it?
I think so. The core takeaway really is the external world, whether it's the market, your industry, whatever, it's an ever-changing river. The challenge, the opponent, it's always a new Goliath, using new tactics you haven't seen before. The only constant, the only thing present in every single situation, every trade, every decision you will ever make is you. You are the controllable variable.
So instead of this endless, maybe futile attempt to decipher an infinitely complex and constantly changing external world, this approach says, turn your gaze inward. Focus your energy on refining the most critical instrument you have yourself. It feels like a radical kind of self-reliance.
It is. And the philosophy is really built on, first, accepting that external chaos and unpredictability. Just accepting it. And then, in response, imposing a really rigid internal structure on yourself. A structure built on humility, acknowledging you don't know everything, acknowledging Goliath is strong, built on strategy, that intense pre-mortem planning, and built on self-awareness, constantly assessing your own skills and execution. You can't control the river. You can't control Goliath. You can only control your preparation, your reactions, and your unwavering commitment to becoming, well, better, a more skilled navigator, a more cunning strategist.
And that perspective, it really does go way beyond trading. It's a powerful lesson for anyone facing situations where things are dynamic, unpredictable, where the rules keep changing. The goal isn't to step into the same river twice, hoping you remember where all the rocks were last time.
No. The goal is to make sure that every time you step into a new river, no matter how different, how wild it seems, you are a stronger, wiser, more capable swimmer than you were the time before. So maybe the question to leave you with is, what aspect of your world, your challenges, could benefit from a little less looking backward at the past results and a lot more focused, forward-looking preparation of yourself? Something to mull over.
Definitely something to think about. Thanks for breaking that down.
My pleasure. Fascinating stuff.